Good morning and welcome once again to Digital Look TV in London. With us today is Ronnie Chopra. He is Head of Strategy at Tradenext. Mr. Chopra, thank you very much for joining us today.
Thank you.
Okay, the debt ceiling. We have a lot of market chatter at the moment regarding the possibility of Fed tapering being postponed as a result of the debate that's going on Capitol Hill. What's your opinion? Is that feasible? Is that a real possibility?
I think it's highly possible that there will be no tapering this year.
Okay.
I don't think Bernanke really wants to be the one that starts the tapering. The whole economic situation in the US at the moment probably doesn't warrant it. I mean, it was a surprise in September that tapering wasn't introduced and that the markets loved it. Commodity prices shot up 4-5%, gold, silver in the space of 3 or 4 hours. The equity markets were boosted. Dollar weakened considerably. But I mean, like, the economic growth prospects in the US probably justify that. Recent economic data hasn't been all that great to warrant any tapering, and obviously the whole government debt situation, the shutdown in the US government kind of just makes that tapering even further away.
Okay, I know some business lobbies in the US describe the current recovery in the United States as shallow. I also know some other strategists talk about growth which is zero bound. Would you concur? Do you agree?
Yeah, pretty much. I think that the world is probably still not ready for tapering. It's not really just the US that doesn't want tapering to start. I think probably more so in the emerging markets. And we saw the recovery in the terrible 5 currencies, you know, when tapering wasn't announced, that the likes of the Indian rupee that have recovered substantially. I mean, like, the Indian rupee was close to 70 rupees to the US dollar a few weeks ago. It's bounced 8 or 9% since then to around the 62 level at the moment. So with the rupee and the Indonesian rupiah, the Brazilian real, they've all been currencies that have hit so hard in the last 6 to 9 months this year. But the announcement of no tapering is kind of given some respite to those currencies, although they may continue to head lower in the not too distant future because of their massive budget deficits. But at the moment, you know, they're more probably grateful to the US for the non-tapering than the US itself.
Okay, Obamacare. We know at the end of the day, it's what's really behind this whole debt ceiling argument, what's going on Capitol Hill. Government shutdowns in the US in the 90s, they were infrequent because Clinton was in power for a very long period. In the 80s, however, they were quite a frequent thing, almost every year. The United States is, above all, a country of immigrants, even the Kennedys. You really don't get much for free. There's a big philosophical debate between Republicans and Democrats. Can that be solved? Perhaps the threat of a government of breaching the debt ceiling is higher than people might think or want to admit, because they seem like very hard to reconcile positions. In the end, it's the Republicans say if you don't work for it, you don't get medical coverage. Although everybody in the U.S., from what I understand, does get medical coverage in the case of emergencies, and if you work, you certainly do have medical coverage. And the Democrats, however, are not willing to cede any ground. Is there a big threat or not?
I think morally, Obamacare is a good thing. It gives the chance to those few that are the unfortunate ones in the US who don't have any kind of medical insurance. So by allowing Obamacare to get through, it's good for the 15 or so percent.
15% indeed, yes.
It's a good thing. However, the costs involved, and probably this is why the Republicans are so anti it, probably does not make much sense. So we kind of have this moral issue on one side with the Democrats, and we have this financial thing with the Republicans. And so the two parties are at loggerheads as, you know, where to go.
Okay.
However, I think morally it's for humans, you know, everyone should be entitled to care, to health care.
So you think an agreement will be reached eventually?
I hope so.
Okay, I hope so. All right, perfect. UK equities, Aviva. I know it's a stock you've been following for many years, I believe.
That's right, yeah.
It's gone through some bad times after cutting its dividend some time back. It's recovered. Is it time perhaps to take some profits, or do we stay in for the long run?
The short answer is staying for the long run. I think they've had a fantastic 6 to 9 months. The shares have picked up from £3 to over £4 at the moment, up around 35–40% in the space of 6 to 9 months. Although having said that, they've still underperformed one of its larger peers now, which was in fact a smaller peer not so long ago, Prudential, with Prudential investing heavily in Asia and reaping the benefits.
Okay.
With Aviva, the company is going through a major restructuring. They've got a new CEO who's transformed the company, very pragmatic in his approach. Today they announced that they're selling their US operations for £500 million more than what was touted back in December, approximately 20% more than the said amount in December last year. The shares, they're still half of where they were in 2007, when in fact Aviva and Prudential had merger talks. Aviva was the larger party then, and today Aviva is around a third of the size of Prudential, even after their strong rally in the share price of 35–40% over the last 6 to 9 months. I think Aviva has a long way to go. Very impressed by the new management, especially the CEO, and there could still be a takeover target. If it's not going to be Prudential merging or acquiring them outright, it could be one of the larger Chinese players,
Interesting. Okay.
or even, maybe a US company that wants exposure in the UK.
There's a lot of UK outfits recently who have been selling their US assets. Aviva is a case in point. You have Vodafone, you have Tesco, RBS, they're saying perhaps it should sell it. Yeah. Is there a common denominator?
That's a strange one, but yeah, there are a lot of big companies trying to get out of the US. I'm not sure why, to be honest with you. I mean, especially with the US dollar weakening as well at the moment. Personally speaking, I think the US dollar's fallen too much, so them getting out when the US dollar is weak also doesn't make so much sense. But the likes of Vodafone, getting out of Verizon, they're getting a good price, I think, Vodafone. The RBS you mentioned, if they were to sell their US citizens arm, again, I think a lot depends on the price, if whatever they were to get from it. Aviva and Tesco. Tesco obviously loss-making operation. They lost more than £1 billion they've written off on that acquisition.
I'm thinking does it have something to do with the relative power of countries? United States economy on a...
Going down?
Well, rather United States economy on an upwards trajectory in the medium term because of the energy revolution. Europe, Britain is still very close to Europe, can't quite achieve liftoff. You were saying before Prudential had done very well in Asia. So again, you have Chinese outfits who are also getting stronger. So the M&A table seem to be turning on European companies?
Well, but it's also coming out of the US though. I mean, there's still, the US and Europe are quite similar. I mean, sure, the US is slightly ahead in terms of the growth prospects at the moment, but still growth is to be found in Asia and emerging markets, more so than in the West, although obviously emerging markets having a slightly bumpy ride as well. But maybe it's something more to do with these companies getting out of the US, is that they can't handle their US operations well. The likes of Tesco, maybe they don't have the kind of control that they have in the UK. It's difficult maybe to control Americans.
Yes, right. Could be. Okay, BP, another stock that you could say it's a bit of a special situation. It's fallen off considerably since the Gulf of Mexico disaster. However, today we had a court sentence, very favorable, New Orleans. BP, might it be time to get in?
I think BP, British Petroleum, is grossly undervalued. They have underperformed significantly over the last few years against both the rest of the oil majors and the FTSE 100. The company share price is currently around the 440p mark. They had a little rise this morning, just over 1% or so. The company with its assets are a tempting outfit for any predator who has deep enough pockets. Back in 2010, when the whole Deepwater Horizon disaster took place, it's been on record that the chairman of Shell, Peter Vosser, looked at the company fairly closely when they were trading just over 300 pence a share. Likewise, other multinational outfits or Chinese or Indian
That's an interesting point.
companies.
Chinese. Is that a possibility?
I know that there's a lot of restrictions acquiring US companies for the Chinese. The UK is slightly different, but BP is also a national institution, and maybe there will be some kind of blockage, but generally the UK is a lot more favourable for foreign predators, and this has taken place over the last 7-8 years. We've had major UK companies being taken over. If I digress a little bit, I mean the likes of P&O back in 2005-06, we had O2, we had Abbey National by Santander. So BAA, British Airport Authorities, again the Spanish Ferrovial Group. Large FTSE 100 companies have been picked up by foreign conglomerates. ICI, another bellwether of the UK economy. So BP is probably a slightly different league, but anything can happen in this world. And sure, I mean, once this court case finishes, if it is not too unfavourable for BP, then there could be quite a few interested parties. Also, just on valuation grounds, it's on a far lower price-earnings ratio than the likes of ExxonMobil, Chevron, Royal Dutch Shell. So it's a company that has great assets and is on the cheap. One thing that may deter foreign predators at the moment is the relative strength in sterling, which is quite surprising at the moment, with sterling at 162, 163 against the US dollar. So that could be a slight deterrent, but it could happen.
Continuing on the theme of emerging markets or emerging economies, SAB Miller, it did take a bit of a hit over the summer, I believe, because of the depreciation in emerging market currencies. Now it seems to be sort of a point, perhaps it might be interesting to take a look at it. Yes? No?
Yeah. With SAB Miller, it took a little bit of a hit as well, even more recently with the Unilever results, and Unilever basically saying that there are slight growth concerns in emerging markets. So a lot of the UK-listed emerging market companies, the likes of Reckitt Benckiser, Diageo, SAB Miller, and Unilever itself, took a little bit of a fall over the last few days with these slowdown growth concerns in the emerging markets. I mean, all these companies have benefited greatly from the boom in Asia and in the emerging markets. With SAB Miller, they obviously have a lot of exposure in Southeast Asia, where people are drinking more now, where they have higher personal
And also in
incomes.
South Africa, no?
And South Africa too. But a slightly smaller market, I think. South Africa still, compared to the number of people in China and India. It's so with SAB Miller also, I think they're trying to increase their margins on some of the premier products in the US, and that kind of is diverting some of the attention in emerging markets. So it's kind of getting a bit of a lift from selling better quality products in the US, and obviously the US is a massive market still for them, with their top brands like Peroni and.
So that could be a trend which is a little bit underappreciated by the market right now, the trend towards bigger margins in the US?
Could be.
Okay. Rio Tinto. I know some funds here in the UK consider it a special situation because of the China worries, the China slowdown. The share price has fallen considerably. Technically, from a technical analysis point of view, it looks like it's fairly in a lateral range, sideways range. should we go into this company? Some people say it's extremely well managed. So whenever China does stabilize, you'll get on top of that an additional uplift from the management. You'll see cash flows improve at a greater pace than at peers.
But will China stabilize? That's the $64,000 question. So sure, Rio Tinto is an extremely well-run, diversified miner. Again, as you were saying, the shares have come off fairly considerably, and they've had a very roller coaster ride over the last 8-9 years, peaking at about £70, I think, in the mid 2000s, maybe 2006-07. There was a bid for them by BHP Billiton,
Yes, you were talking
about above £60 a share. They're currently around the £30 mark, give or take a few pennies. But soon after the bid, when the bid was at £60, I remember them falling below £10.
Right.
So the volatility in some of these companies is unbelievable, even a company the size of Rio Tinto. But as you were saying, they rely heavily on what's happening in China.
You were saying before, China, will it stabilize?
Yeah, well, that's a lot of, well, the thing is with China, everyone has to take their data with a pinch of salt. You know, sometimes there are economic figures that just contradict each other too much.
Okay.
So I hope China stabilizes. I mean, they've still got a massive population that, you know, wants goods, and obviously mining companies benefit from that with the metals, etc., and at stake. But yes, if one was to pick a mining stock to have in one's portfolio, then certainly Rio Tinto would be one of the few that one would look at.
But you are a bit wary.
I'm a bit wary.
Okay. Mr. Ronnie Chopra, Head of Strategy, Tradenext, thank you very much for joining us,
Thank you.
and we hope you'll do that. You'll be with us again soon.
I'd love to be. Thank you.
And that's all from us here at Digital Look TV in London. Thank you once again for joining us.